The country here, where you see red, especially out there in California, the darker the color, the higher gas price you're paying. These green states, that's I'll say lower price. I'm not saying it's a low price, trust me, still over $3 a gallon in all those areas. That's the effect of state gas tax on this debate. So as the prices go up, more places are turning red. The big debate now is, should we tap the strategic petroleum? What's that? Well, the United States government has strategic reserves, about 727 million barrels. It's kept in 4 places right here along the Gulf Coast. You see them right there. The average price the government paid for that, way below what it's selling for now in the market, about $29, $30 a barrel. Enters the market in 13 days. You tap it, that oil can be to the market in 13 days. Cost the government about $22 billion to build up those reserves. Has been done before, largely to make up for disruptions in the market, like after Hurricane Katrina, Desert Shield, Desert Storm. Essentially, the government puts some oil on the market until the companies can replace it. So is it a good idea to tap in? That was a question I put just a bit earlier to John Hofmeister. He's the founder and CEO of Citizens for Affordable Energy and the former president of Shell Oil. So, John Hofmeister, you hear some of the politicians saying the price of gas is up, the president should tap the strategic reserves. Good idea?
No, it's not a good idea at all. That's not the purpose of the Strategic Petroleum Reserve. The reserve exists for the event of national emergencies, which would include shortages or outages. And frankly, there is no shortage of oil in the United States today. We have record inventories in Cushing, Oklahoma. There are no refineries that I'm aware of anywhere in the country that don't have an ample supply of crude oil. And the idea of opening the Strategic Petroleum Reserve to impact price is just a non-starter.
And so why is it then that every time you see a spike in prices, this spike caused by the uncertainty in Libya and the Middle East more broadly, but why is it that every time we see a spike, some politicians say, open the reserves?
Well, some people like to give lollipops to angry children to calm them down. And they think that might be a way of getting voters to back off, because no question, when elected officials go home today and they face voters who are paying through the nose for gasoline at the pump, they don't want to say, look, it's our fault. We're the politicians that refuse to drill American oil. We're the politicians that have refused in the last 2 Congresses to change our energy policy. We'll open up the Strategic Petroleum Reserve for you and make you happy for a few days. It's a nonsense situation, John.
Well, if it's a nonsense situation, help people understand this, because you're making an emphatic case that there's no supply problem here, that no refinery in America is waiting for oil, that there's plenty of oil on the market. The Saudis have promised that if there was a shortage, they would increase production a little bit. So why then is the market, why is it $3.51 on average, and in some places more than $4 a gallon then, and why has it gone up so sharply in the last 2 weeks if there's no supply problem?
There's a couple of reasons for it. Number one, the overall supply-demand situation is clearly tightening. Since last August to the present, global economic growth, including U.S. growth, has led to not shortages, but tightening of the supply-demand relationship. Secondly, the particular growth in Asia and the way in which China is contracting for its future oil instead of wanting to use the global trading pool means there's a potential future less oil on the trading marketplace. And thirdly, the U.S. not wanting to produce its own oil is a serious, serious problem. It's all complicated now because of the turmoil in the Middle East. And frankly, oil hates turmoil. And the fact that this turmoil could spread, contagion could set in, and everybody's really worried about what might happen in the Persian Gulf with respect to Bahrain, Saudi Arabia, Iran, and so on, that there's this uncertainty that is just spiking, actually, the price. It's irrational, John, but it's happening.
Does greed play a role here? Does greed like turmoil? Are there people out there who are making extra money because of all this, maybe charging too much because of all this, because they have the turmoil as an excuse?
I think we have to worry about 2 kinds of potential greed plays. One, yeah, there's always some level of speculation of people who are going to cut a deal because they can cut a deal, and it's not really necessary, so they're going to tempt a buyer of oil to buy it now, which spikes the price even further when that buyer really doesn't need to buy it, but he's pushed by that person. Secondly, there are some retail stations that are run by some real knuckleheads that want to raise the price just as fast and as high as they can to get it while they can, taking advantage of the uncertainty. Over time, that shakes out. Over time, there is no ability to be too greedy in this market. It's too competitive. But in the short-term volatility, it can happen.
And is there a long-term lesson in what we're watching right now in Libya, or is this just one of the policy bumps, one of the global turmoil causes trouble in the markets, in this case the oil markets? Is there something the president should be doing? Should he be saying, never mind the strategic reserves, but we're going to do this?
I think the long-term implication for the United States is this nation is the #1 cause for high global crude oil prices because of the serious imbalance in our daily consumption compared to our daily production. No other country has such an imbalance as the United States. We use 20 million barrels a day. We produce 7. We could produce 10, 11, 12 million barrels a day, but we don't. So for us to fail to produce our own crude oil makes us really, we don't have the right to complain about global prices when we're the main cause of those high global prices.
But it's harder to make, and excuse me for putting these words in your mouth, the drill baby drill argument post-BP, isn't it?
Well, that's an issue. And BP really messed up the Gulf of Mexico in addition to the tragic loss of life. But responsible companies operating responsibly have demonstrated over 100 years a pretty good track record, over 50 years in the Gulf of Mexico, 40,000 plus wells. The one bad anomaly, the BP Deepwater Horizon, really taints it for everybody, but perhaps that's not justified. And we're not going to stop using oil anytime soon. We can't. We are dependent upon an infrastructure that is an oil-based infrastructure. I've been working on alternatives for 10 years in one way or another, and it's going to take another 10, another 20 for them to have a material impact. Meanwhile, we really need more oil.
John Hofmeister, appreciate your insights.
Thank you.
Still to come, a new presidential